Recording prepaid expenses can be really tricky, so hang in there with this video. Just take it slow, stop the video, rewind it, pause it as you need to, and let's go. So basically what we learned in the last video with prepaid expenses is we're going to use what's called an asset approach. And what does that mean? It means that at the time we pay a prepaid expense, it's actually an asset, even though it's got the word expense in it. We say it's a current asset of unused economic benefits. And then all we're doing really is turning that current asset into an expense as the economic resources are used. And the example we used was prepaying the rent for a year. So if you on the 1st of January, prepaid the rent for a whole year, you'd actually have an asset for the future. It's not an expense at the time you pay it. And what we said was, well, let's think of that as a big tank of unused economic benefits. Now, when you have unused economic benefits, that is an asset because those economic benefits will be in the future. They haven't been consumed yet. And then all we're really doing with the prepaid expense is transferring them over as we consume them. So as we consume January's rent of $1,000, we transferred it to another bin where we said, well, that's going to be used economic benefits. Now, when we use or incur or consume an economic benefit, that is actually an expense. And as we do, as each month goes by, we put January's rent in there, and the water level in the tank of unused economic benefits in the asset went down 1,000. Then February, we consume that. Well, this goes in, it's got to go from here to here, we transfer that over. March goes by, we consume another month of rent, and again, the current asset's going to go down, so down to 9,000, and it goes into the bin for expenses, and so on. Each month, we're just transferring $1,000 of rent or economic benefits from the asset tank to the expense tank. And eventually what will happen is over time, as we consume each month of rent, September, October, November, and December, we will have consumed all of the economic benefits. And when we do that, we will have no asset left and the entire thing will be an expense. So let's look at how to do that. So basically what we're going to do is on balance day, we're going to split the economic resources or benefits from the prepaid expense into two parts. The bit that we've used and the bit that is unused. Now, the bit that we've used will be the expense, and the bit that is unused, that will be used in the future, is the remaining current asset. So let's take our example. On the 1st of January, let's prepay $12,000 plus $1,200 GST for rent for the next 12 months. We've got EFT 101, and we paid it via online banking. And there we go. As soon as we did that, that's actually an asset of unused economic benefits. Put it in our tank. Then balance day happened. Now for this business, let's say balance day could be anywhere, but let's say for this business, it's going to prepare its financial reports annually on the 30th of June, right here. Now what that's going to mean is after 6 months, we'll have used or consumed or incurred, whatever word you want to use, 6 months worth of economic benefits. Now as we do that, they all become an expense. So basically this water tank level is too high. What we've got to do is transfer some of that over into another bin of used economic benefits, and that'll be my expense. So basically, just to go back a step, I've got to get the $12,000 here from the assets tank. I've got to get $6,000 into this tank, and I've got to take $6,000 out there. So that's basically what we're doing, making a transfer from the asset tank to the expense tank. All right, how are we going to do that? Well, we're going to do that with a balance day adjustment. That's the whole point of this chapter. We're going to need to do a balance day adjustment to record the rent incurred for the period. So that's our mechanism of doing that. And it's very complicated. So let's do some steps to follow each time. And look, the question might not even ask for all of these steps, but at least if we know them, we can look for them and know how to do them if we do get asked. Step 1, record the prepaid expense in the general journal using the asset approach. Step 2, post that to the general ledger. Step 3, the most important one, record the balance day adjustment on, in this case, the 30th of June. And this phrase is going to be the most important thing for the whole topic. Debit the expense. On balance day, we always debit the expense. Step 4, close the expense to profit and loss summary. Step 5, balance the prepaid expense account in the next period. Now, on their own, this doesn't mean anything. You're not going to remember this. So let's go and do an example to try and get it to stick. So here's our example. Prepaid on the 1st of January. Balance day on the 30th of June, so we need a balance day adjustment. Step 1, record the prepaid expense using the asset approach. So we've got our general journal, and we're going to need to know our rules of debits and credits from earlier in the course. So the first one we've got is we said when we pay it, it's actually an asset. So see, it's got the word expense, but we've got a little A there for asset, so don't get confused. It's a prepaid expense, which is actually an asset. Now that is going up. So the rule says when an asset goes up, that's a debit. Now we also paid some GST. So we're going to need to go to our GST clearing account. That's a liability. And when we pay that, it actually decreases our liability. So that would be a debit there. And then every debit needs a credit. So what would happen here? Well, I'd have my bank account. That's an asset. I paid $12,000 plus $1,200. Well, that makes it go down. So that would be a credit there. We might get asked for a narration, and we would write something like prepaid rent for the next 12 months, and we'd put the document number, which in this case was up here, it was EFT 101. All right, so all we did really, basically, is made a ledger called prepaid rent expense to put all these economic benefits in. It's just a big tank sitting there now, and that's all we did with step 1. Step 2, well, we might get asked to do the ledger. We might not. It just depends on the question. But what would that look like? Well, I'd have 3 ledgers. I'd have one for prepaid rent expense. I'm just going to put that in green just to highlight it. One for GST clearing, one for bank, do my debit there, credit there, and then I'm going to put my references in. I always find it easiest to do the references last, but you do them in whatever order works for you. But I would say there's 2 debits here. There's one for 12,000 and 1,200 there. Where's the matching credit? Well, they're both in this entry here in the ledger called bank, so I write bank there and bank there. What about here? There's a credit of $13,200 in bank. Where will I find the debits? I'll find them in 2 accounts. One's called prepaid rent expense and one's called GST clearing, so I'm going to put that as a double reference there. You could put them in separately, but it's just more efficient to do them together. Step 2 done. Step 3, this is the topic, this is the chapter. Go and do the balance day adjustment on the 30th of June. What do we mean? Debit the expense. So here's what we got. I just made in the previous step a ledger called prepaid rent expense, which is an asset, and it's sitting there. It's a big tank of economic benefits that have not been used yet. Now on balance day, all I'm doing is creating a new ledger called the rent expense, and I'm going to debit the expense. What does that mean? It means I've got to get the economic benefits from the asset tank on the right. Got to transfer them over on balance day because I've used, in this case, half of them, 6 months worth. I've got to transfer them from the tank for assets over to the expense tank. How do I do that? I debit the expense with a balance day adjustment. Now, all our balance day adjustments are going to be done by our debits and credits. So we'll do a debit there, debit the expense, we debited rent, and then we do a credit there to prepaid rent. And all that does, if we just go back a step, first of all, I needed to get, this tank has nothing in it for the expense. I've got to get $6,000 in there, and I'm going to do that by debiting the expense there. So I did this, and the water level went up. And then, just to go back again, I got $12,000 in this ledger here. There's the tank. And what I needed to do was to take out there $6,000. How did I do that? I did a credit there. Okay, so how will we do that? Well, we do it in the general journal. We do our balance day adjustment. What did I just do? I did a debit there to the rent expense account and a credit up here to the prepaid rent expense account, and maybe a little narration. Nearly there. Step 4, close the expense account to profit and loss summary. Well, we learned this in an earlier topic. All the revenues and expenses must be closed to profit and loss summary. So in this case, rent is an expense. At the moment, what did we do in the previous step? It's just sitting there with a debit balance of $6,000. That should not carry forward in the next period. So I'm going to shut it down with the credit there, and I always send that credit to a new ledger called the profit and loss summary account there. How would I do that? I always do that in my general journal. What did I just do? I did a debit, the profit and loss summary there, and I did a credit to the rent expense account, and I just make a little narration, maybe closing the account or something. Last step, maybe I have to balance the prepaid expense account in the next period. What the hell does that mean? What means it's actually an asset. It says expense, but it's an asset. And if we remembered our earlier topic, all the assets, liabilities, are known as equities, must be balanced in the next period. So let's just take this. What did we just do? Well, first thing we did to this asset account was we made a big tank of economic resources or benefits there on January 1st, and we prepaid, there it was. And then on balance day, we took out what we used. Well, we need to balance that in the next period. How do we balance any ledger? We add up which side's bigger. Now in this case, it's clearly this side on the debit. So I'm going to write that total and leave a line there. And I write it on the same line on the other side there. And then what I do is I've got to figure out the balance going in the next period. So I just subtract the smaller numbers. Now in this case, there's only one at 6,000. So that would mean my balance there is also 6,000. I write the last day of the period, which in this case is June 30th, and I write the word balance. And then I carry that forward to the next period. Don't forget to carry forward because see that says June 30, end of this period. July 1st is the start of the next period. So it needs to have an opening balance next period. It's called carrying the balance down or carrying it forward. So don't forget to do that too. And now we've done all 5 steps. So just to summarize what we did in terms of, well, we're doing balance day adjustments, and that means that we will now have two trial balances. One is called a pre-adjusted trial balance, okay? And I'm going to highlight this item here. It would have been sitting there since January. There would have been a ledger called prepaid rent expense. That's $12,000. It would have just been sitting there. And what we needed to do was go, well, no, we've actually used some of that. That figure's not right. I needed to do a balance day adjustment, a BDA. And I did that in my general journal. I did a debit to rent expense and a credit to prepaid rent expense. What happened? Well, that means that I will now have a post-adjusted trial balance. So see this here, rent expense 12,000. Well, I've got to change that in the post-adjusted one. It should go down to 6,000 because I decreased it. So the first thing I did was I made a new account called rent expense. I just moved wages down, just moved down right there. Got rent expense. Expenses are debits. There it was. It says rent expense there. Debit. That was 6,000. And what did I do? Well, this was 12. I took it down by 6, and now that's only 6. So basically, the balance day adjustments are to make sure your pre-adjusted trial balance, it's not correct. It's not like final. These are just preliminary numbers. I got to do this balance day adjustment. And now I can go and make all my reports, my income statement, balance sheet, and cash flow statement, because I can use the numbers in my post-adjusted trial balance, which is the final and correct one. So that was everything you need to do for a prepaid expense. You're probably not going to get that on the first watch, okay? So the important thing is to go back, review the video, do the questions that we give you from the book and also in class, and to pause, stop, rewind, rewatch, and just take it one step at a time, okay? It's a difficult topic, but if you practice it enough, you're going to be fine.